All right, let's jump right into this explainer. Today, we're exploring this really fascinating intersection of 5,000 years of business history and the modern technological revolution we're living through right now. Accounting is a discipline that's so often stereotyped as just boring number crunching, but it's actually the very architecture of economic accountability. So, we're going to unpack exactly why the rise of artificial intelligence isn't just swapping out a few old tools for new ones, it's fundamentally transforming the financial roles that literally hold our economy together.
So we have to address the absolute elephant in the room right off the bat. Is AI going to replace your accountant? I mean, you see the headlines about AI automating everything, and it's easy for panic to set in, right? But to truly answer this question and to understand why AI is completely rewiring financial roles, we kind of have to look backwards before we can look forward. We really need to understand what an accountant was actually designed to be in the first place.
Section 1. The Engine of Commerce.
To really wrap our heads around this evolution, think about how perfectly the history of accounting mirrors human civilization itself. We're going to trace this arc, and what you'll see is that accounting is definitely not a static, boring discipline. It's a living technology. Every single time commerce leveled up and became more complex, accounting had to evolve to handle it. Back in antiquity, when we suddenly had agricultural surpluses, we needed centralized control, so boom, we get clay tablets and tax records in Mesopotamia and Egypt. Fast forward to the Industrial Revolution. We've got massive railroad expansions, huge aggregations of capital, and suddenly we need unified standards. That gave birth to the chartered accountants and CPAs in the late 1800s. And then, when the stock market completely crashed in 1929 because of a total lack of transparency, the system adapted yet again, creating the SEC in the 1930s for oversight. The point here is that technology and complexity always force a professional evolution.
Now, the ultimate historical leap happened during the Renaissance. It was the invention of Luca Pacioli, who is often called the father of modern accounting. Fun fact, this guy actually worked right alongside minds like Leonardo da Vinci. In 1494, Pacioli codified double-entry bookkeeping, and it all boils down to this incredibly elegant equation: assets equal liabilities plus owner's equity. It provided a completely reliable, self-checking foundation where every single debit had a corresponding credit. This wasn't just a minor update. It transformed ad hoc bookkeeping into a standardized mathematical structure that quite literally enabled global free market capitalism to expand over the next 500 years. It was absolutely the cutting-edge information technology of its day.
Moving on to Section 2. The Language of Business.
As corporations grew and became massively diversified in the 20th century, this discipline had to mature. It had to go from simple clerical record-keeping into a really highly regulated framework. Now here's the crucial takeaway. You do not need to get bogged down in the dense mechanics of all the generally accepted accounting principles, or GAAP. You don't need to sit here and memorize the intricacies of the matching principle or conservatism. You just need to understand exactly why they exist. The Financial Accounting Standards Board created these rules for one specific reason: to build a standardized language that prioritizes relevance and faithful representation. The whole goal is to provide decision-useful, neutral information to investors. At the end of the day, it's all about building market trust through a language everyone can rely on.
So historically, the industry has been caught in this continuous sort of two-step dance. On one side, step one, you've got internal managers. Think about massive early 20th century companies like General Motors or DuPont. These managers desperately needed granular, detailed data, like return on investment, just to survive fierce competition and build their strategies. But then, on the flip side, step two, you have external regulatory bodies like the SEC, demanding standardized, transparent compliance to protect the public from, another Great Depression. It is this constant, ongoing push and pull between internal strategy and external compliance.
Which brings us right into Section 3, the AI automation revolution. All of that historical context we just went through, it perfectly sets the stage for the most radical transformation in finance since the Renaissance. Artificial intelligence is not just a shiny new toy. It is the exact same kind of evolutionary pressure that brought us clay tablets and double-entry bookkeeping. Just think about the scale of this: minutes versus days. AI generative models are stepping in and totally wiping out the tedious grunt work. They're summarizing massive, extensive documents, processing ridiculous volumes of transactions, and spotting data anomalies in mere minutes. We are talking about tasks that historically required days and days of manual human labor. And the craziest part? AI does all of this while practically eliminating human error. The routine transactional functions of accounting are quite literally being automated out of existence.
Now, imagine combining that incredible AI capability directly with blockchain technology. It's a total game changer. Blockchain gives us a decentralized, secure data distribution network. It creates ledgers that are completely immutable and tamper-proof. Transactions are visible in real time. That means those frustrating delays caused by manual reconciliation across different parties entirely eliminated. And this fundamentally shifts what an auditor actually does. Instead of sitting there manually checking individual data points and digging around for fraud, the auditor is now validating the integrity of an entirely tamper-proof system in real time. The machine ensures the accuracy of the history, and the human ensures the governance of the machine.
Section 4. The Strategic Advisory Pivot. Because these technologies instantly handle all that procedural, day-to-day work, we're seeing the massive commoditization of transactional accounting. The contrast between the past and the future is basically night and day. Historically, the accountant was a clerical record keeper, right? They were bogged down in manual data entry and laser-focused almost exclusively on compliance. But because AI eats up all that backward-looking data entry, it actually elevates the human being into a forward-looking role. The future professional is a predictive, strategic partner. They're going to manage the AI systems and focus heavily on business intelligence. AI is literally transforming the role from a historian into a visionary. Think about how time allocation is going to shift here. It is radical. All those hours previously burned on manual audits and routine reconciliations, they plummet. They're practically gone. Meanwhile, that massive amount of freed up time skyrockets straight into data analytics and strategic advisory. Going forward, financial professionals will spend their days utilizing really comprehensive business intelligence dashboards, taking in multiple data streams to proactively spot opportunities and threats, long before they ever hit the external balance sheet.
And finally, Section 5, Future-Proofing the Profession.
Okay, so why does all this matter to you? Well, your future career survival absolutely depends on adapting to this new landscape. If you want to avoid being commoditized into obsolescence, tomorrow's financial professionals have to master a brand new set of competencies. Yes, for sure, you need advanced data analytics, interpretation, and you need the ability to manage and deploy AI systems. But look closely at that last point, sophisticated communication and consensus building. That right there is the human element that AI simply cannot replicate. You have to be able to take complex, AI-generated data, interpret the strategic risk behind it, and then drive consensus across an organization's leadership to actually take action. The new role is basically part data scientist, part strategic communicator.
There's a quote directly from the source material we've been analyzing that I think is just the ultimate takeaway for this entire explainer. It says, "The future of accountability lies not in recording history, but in leveraging technology to predict and shape financial outcomes." It's such a powerful reminder that from clay tablets all the way to modern AI models, technology has always been a tool designed to help us stop dwelling on the past so we can accurately architect the future. As we wrap up this explainer, I really want to leave you with a provocative thought to chew on. Are you ready to stop recording history and start shaping the future? Because this transition, it is already happening. AI is already doing the grunt work. The real question is, are you prepared to step up into the role of a trusted, value-added advisor in this incredibly fast-paced, data-driven economy? Take some time to think about how you can elevate your own skills to become that strategic partner. Thanks so much for exploring this with me, and I'll catch you in the next explainer.